We talk in the company about being IPO ready. It's not necessarily that we're going to IPO, but it's saying that we have the fundamentals to go public if that ends up being something we want to do. So we're doing a lot right now to get there. If I think about what we need to do, it's not long term. It's relatively near term.
Jeff Waters is always looking for a challenge. He thrives on chasing growth and the rush that comes by solving hard problems. And a maturing market often signals the need for a fresh start. So it may come as no surprise that Waters found his way to battery storage and one of its darlings, Oregon-based Powin Energy. The company with 3 gigawatt hours of assets in operation and another 12 gigawatt hours in production is steadily separating itself from a pack of would-be contenders. Waters got his start in semiconductors and later led solar module manufacturer Maxeon in its spinoff from SunPower into public markets. Only a few months into his role as Powin CEO, he's already positioning the company to be IPO ready for the time when the right opportunity arises, and it could be soon. I'm John Engel, Editor-in-Chief of Renewable Energy World. This week on Factor This, Waters highlights opportunities ahead for battery storage, weighs in on concerns of market saturation, and discusses a potential IPO timeline. That's all next on Factor This from Renewable Energy World. Jeff Waters, thanks so much for joining the Factor This podcast. It's great to see you.
John, great. Thank you very much for the offer. Happy to be with you.
Yeah, of course. So I will acknowledge that you're just about 3 months into the new gig as CEO of Powin. So we give you a little bit of grace there, but I appreciate you for agreeing to come on. I think I reached out the second that you were announced, and rightfully, your team thought maybe he should get his feet wet a little bit before coming on the podcast, which I think they were right to do. So just to set the stage here, Powin, based in Oregon, battery storage provider that has experienced some really remarkable growth over the past few years. And I'm looking forward to unpacking that transition for you and the company and your views on the broader battery storage landscape. But let's start with the move. Let's start with your career shift. You were appointed CEO of the solar module manufacturer Maxeon when it spun off from SunPower and took that company public. So why was this the right time for a change, and what excited you about Powin?
You know, it's interesting as I've thought about my career, a little bit of the changes I've made have been somewhat serendipitous, but I think I give myself a little bit of credit for really enjoying markets that are trying to do important things, but that are also in a real significant period in their growth. I spent the first half of my career in the semiconductor industry. So this is started out of undergrad in the late 80s, early 90s. And, their chips were kind of just coming in to solve a lot of problems, right? Replacing vacuum tubes in computers. They were, enabling early cell phones, enabling the internet, more recently enabling driver assistance and safety features in cars. But as you look through the way those markets emerged, you had this great idea, this great technology, but to get that technology to the point where it would be mass manufacturable, would have the quality and reliability that it needed, that it could safely do what the problem was that it was trying to solve, that took a lot of work and took a lot of effort and a lot of innovation. When I made the move, first to join SunPower, and when they were contemplating the spinoff of what then became Maxeon Solar, it was really my first kind of foray into renewables. And I kind of saw the same thing. I mean, as you know, here in the US in particular, there's this debate between people that are very strong on renewables, people that are more skeptics around it. And so I went into it with a pretty, let's say, a blank slate and thinking about it. What it struck me is that this is a great solution to a very significant problem, and that I think reasonable people can create arguments as to why we're not quite ready to make the full switch over to a clean grid. And it struck me as being a really fun thing, a really valuable thing to put my energies into. So I joined SunPower. We were fortunate enough, especially during a pandemic and all the supply chain wackiness and capital constraints that were out there, to get the spinoff to happen. And Maxeon was launched as a public company. Had a great ride there. And I would say as a part of that, we built up a 2 gigawatt utility scale business. I think as a part of that, what I saw was that really what is holding back a clean grid right now is storage. I think with panels, panels, we've been at it for panels for multiple decades. I think there's a lot of volume, there's a lot of reliability, the costs have gotten down. I think it's a great source of energy. But as you know, because of the intermittency of solar and of wind and other renewable sources, the thing that's holding back more of a conversion, more of like getting rid of all the arguments as to why we can't have a clean grid is really around storage. And so when the Powin opportunity came along, to me, it seemed like just a great place to put my experience and my efforts into.
And I think it's a good sign for storage that you're jumping in now, because you're someone that targets growth opportunities and growth segments, and companies poised for that. You went from semis to solar and now to storage. The former two have experienced a bit of commoditization in which we hope that storage doesn't follow a similar trend. But how do you view that in terms of the opportunity here? Why Powin? Why this moment? And you've been in that race for a long time. I'm sure that you don't want to continue getting into that, that path, because it's exhausting and it's hard work.
Well, in some ways, commoditization is a good thing, right? Because it speaks to maturity, it speaks to widespread availability of a technology and a solution to an important problem. I think when I think about why I don't see storage as racing to commoditization in the same way that you've seen panels, is I think it's a much more sophisticated and complex problem. And really, storage at the end of the day, probably the best analogy I can make is to a lot of the driver assistance and safety features that goes into cars. It's not just a hardware solution. It's not just a software solution. It's the combination of the two. And it's solving a super important problem, but also one that really demands quality, reliability, and safety. So it's not the kind of thing that you can do in a half-hearted way. It's got to be a complete solution and one that can be trusted. When you think about the market, then you combine just kind of the unique elements of the kind of the developer market and the utility market. You've got customers that are deploying, billions of dollars in capital to go after solutions that have, for very financially savvy people, have really high hurdle rates when it comes to business returns. They're looking for solutions. They look right now and they see storage as being, what a great thing to add to the grid. It could solve a lot of problems. It's a great effective way to get there. What they want is a supplier, a partner that they can trust. And I think that trust falls along three key elements. The one is, are they bankable, and are they going to be bankable long term? So can I count that they're going to be there from day one through day 7,300 of my project? Do they have a product that can get delivered on time so they can help me meet my schedules to my end customer? And is it a product that has high quality and high reliability? Doing all three of those things is a challenge. When I saw Powin, struck me as a firm that in many ways I think is uniquely served to check those three boxes and be a great supplier for the long term. I think that also speaks to why this isn't something that I think is going to commoditize quickly.
So before we get too far down the rabbit hole here, help us set the stage for Powin's role in the market, what you're doing, and then describe for me where the company is in its own growth trajectory, because you strike me as someone who likes a challenge and wants to get to that last mile and wouldn't just join an operation where all of the tough stuff is done. So help us get there a little bit.
Sure, fair to say. So I think the way to think about Powin is when you look at the opportunity for doing large-scale storage, large-scale grid-connected storage, really what Powin's trying to do is to make that a very safe and effective investment for developers, for IPPs, for the utilities. So in order to do that, you need to develop a complete solution, which is what we do. So we don't do the cells. That's really the only part that we don't do. So we will rely on a multitude of suppliers, and seemingly every month there are new suppliers that are coming into that market. But we take a look at the rich and broad number of cell suppliers that are out there. We pull those in, we assemble them in our own modules, we assemble those into stacks. We then couple those with inverters and transformers, and we make a complete hardware solution We then couple that with a complete software stack, everything down to the BMS, which manages the battery, the cells at the cell level, all the way up through the TMS, which does all of the thermal management, and then all the way up to the energy management as well, that really helps with the overall management of the system and the connection to the grid. So we do all of that. And again, if you go back to the original premise for why we exist, if I'm investing $1 billion, I want to work with somebody that's going to deliver me that system. I want basically one throat to choke, right? I want somebody that can bring together that complete system and is able to control it all the way down to the software level, and to be able to give me the assurances that I'd like to have around security, right? And certainly owning that whole software stack is important. One of the things that I liked about Powin is it wasn't kind of a far-flung idea. It wasn't some new entrant. Powin's been at this, I think, for close to 7 years. We really started in earnest shipping products probably going back to 3-4 years ago. Today, we have 3 gigawatt hours that are deployed out in the field. We have another 12 gigawatt hours that are currently in some form of construction as we speak. And I would say the demand is overwhelming. There is such a rich amount of opportunity that's out there that, for me, where Powin is in the market that it is and the problem that it's trying to solve just seemed like the ideal opportunity to jump into.
Parsing out the product a little bit more, we do see a number of new entrants on the software side and some with some considerable scale. But to get a Powin battery, do you also have to have the Powin software? You don't piece those out at all?
We don't. So, and that's, I think, one of the benefits that we have as a company is, many of our competitors, they will get the BMS from whoever's supplying their module, whoever their cell supplier is. And we do that all ourselves. And I don't think it in any way for our customers, I think they see it as a big advantage of us because they know that we're going to own the full stack, right? We're not going to be pointing a finger at somebody else or blaming somebody else for a BMS that went awry. We own it, it's integrated, it's tightly coupled with the thermal management, with the energy management that happens at the higher levels of that software stack.
And then the choice to avoid getting involved in cells, is that just a risk management perspective and trying to focus on what you're good at, not get so hung up in the supply chain mess?
Yeah, cell development is a beast in and of its own, right? It's, not just to develop today's technology well, which is not easy. And there's certainly a lot of, I think, fairly cheap capital over in China that goes at that and across Asia. It's not a great space to be in for too many, I would say, Western companies, in particular for a U.S. company like ourselves. You also have very significant capital investments that go into that. And those are capital investments that if you have some kind of a breakthrough technology change, which many are trying to develop, if you have some kind of a new cell chemistry or cell architecture that comes along, it could render a big chunk of your capital useless to an extent, right? You have to go back and replace it. So for us, we see that as the piece where there are a lot of people coming into that. We feel that'll get commoditized, and we can leverage multiple different suppliers to build up the systems that we have where we think the real differentiation is.
Explain that a little bit more on the differentiation. What do you think separates Powin from other providers that are in the market, both in the US and globally, because it is pretty competitive?
Yeah, I would say, it goes back again to the kind of the 3 tenets that I described, right? You want to be kind of bankable for the long term. You want to be a company that has, that can deliver on time. You want to be a company that has a product that will work throughout the lifetime of our customers' projects in the way that we promise that it will. So the key ways to differentiate within that space. I think first, maybe I'll talk about it in terms of our competitors. I think I would break them into a couple of buckets. I think on one hand, you have a number of competitors that are coming from outside of the United States, coming outside of, let's say, sitting mostly within the Chinese, within China, and maybe sitting over in Asia. I think as I think about them compared to what we do, a lot of the more localized support that we have, a lot of the more kind of a customer friendliness that we have and long-term support is something that our customers find compelling, whether it be in Australia or whether it be in Europe or whether it be within the US. And I think there's also, if you think about the financial relationship that you're creating with an energy system supplier, you really need to make sure that you've got somebody that you know that if things do go sideways, in the unfortunate event they do go sideways, that you've got the ability through a court system to be able to get things figured out in one form or another, and that you need to be able to feel confident that they're going to be able to stand behind their contracts. So I think we stand aside from a good chunk of our competitors. I think when you then think about our domestic competitors, one of the great things about Powin, and I'll talk about some of the product differentiation, but one of the great things about us is that we're a pretty independent company. Some of our competitors are part of a bigger company that has a lot of other competing influences, and they've got, parents to answer to higher up in the organization. In other cases, they've come together because of some, complex joint ventures that have created them, which creates some additional complexity. For Powin, we are, private equity and venture backed. We've got a great board that trusts my leadership and trusts my team's leadership. So we've got the ability, I think, to really stand behind doing what we say we're going to do when it comes to contracting and other long-term product commitments. From a product perspective, I think the full, the software element to what we do is fantastic. I think the fact that we've got the ability to work with a broad number of cell suppliers is also really important, especially in the tumultuous supply chain environment that we sometimes get. So I went on for a little bit there, and John, I think you were going to jump in. Maybe I'll pause.
No, that's helpful. I was already starting to think about how we transition to the hard stuff, because that's what I love talking about on this podcast, and I think that's where we provide value. Is how do you see the market and what are you trying to address? And I'm assuming there was a list or a stack of items that wound up on your desk on day one of here are our near term, medium term, long term challenges and how we continue to scale this company. Can you run through some of those in where you provide the most value to Powin to reach that next level, and maybe what some of the early struggles are or were?
Sure. Well, I'll just say with Powin, I mean, it is a company that grew from, almost 0 to 3 gigawatt hours in the course of just a small handful of years. So pretty significant growth, very fast. We've had very large established customers, companies like Acacia, who's owned by BlackRock, EDF, a variety of others where we have public announcements. So we've got the big customers. Really, where we are as a company is at that inflection point where you want to go from your first big wins to really being able to scale. And when I think about the industry, I would maybe use that as a bit of an analogy for the rest of the industry, where you've got a number of kind of first wave of storage systems that went to the early adopters in the market, people that were willing to maybe take a little bit of a chance with a company they hadn't heard of before, or maybe with a technology that they knew had promise, but wasn't out there in the system with out there in the field with thousands of hours. But they were willing as early adopters to make that leap. A lot of the bumps in the road happened during that period of time. Powin had them, our other large competitors have had them. And I think we're now at that stage where, okay, we're kind of we're beyond that early adopter phase. And I think the market now is really looking for, okay, give me solutions that I know are going to do what you said they were going to do, that I'm going to, have minimal chance of thermal events, but that they can get managed when they do happen. So you're really making that transition now. And I think that is where I think a lot of the effort's going in with Powin. We have safe, reliable, quality systems. The question is how do we take that up to an even higher level? And how does the industry do that? It's one of the things that I think has maybe held storage back a little bit in the early years is, if there is some kind of an incident that happens with a fire or something along those lines, it gets in the news, it creates a lot of fodder for naysayers about clean energy. And so how do you graduate from something that is safe, but how do you make it so that it hits that very, very high level of reliability like you have, maybe in the driver assistance systems in a car?
It's interesting you frame it that way, and I appreciate you for doing so on thermal events, because you do bring it up as if it's not a big secret and that it's obviously something that we have to deal with. But I do come across the lithium ion players that don't want to talk about thermal events. No matter how seldom they happen, it is still something we have to deal with, and perception is oftentimes reality. And I think we're seeing that play out in some regions like New York that is now putting together task forces on how to engage communities and firefighters and how do we deal with these batteries and thermal events. when you have a few in one season, then it starts to become a trend in some people's eyes, whether it is or not. Well, why do you approach it that way? Because I've done even interviews for this podcast and for Renewable Energy World where at the outset, the lithium ion folks say, I don't want to talk about fires. Let's talk about everything else.
I think if you want to make storage what it really needs to be for the world and what the world needs it to be, you have to address these challenges head on. I will point out, as I'm sure maybe others have, that if you look at all the traditional forms of energy, there are all kinds of challenges and issues with all of them, right? I think, we're putting more of a microscope onto renewables because it's new, right? And people are looking for things to be concerned about. But I think you need to take these kinds of issues and address them head on. In the automotive industry, when there are safety issues that are out there, you get all over them, you make them the top priority at the company, and you don't just certainly you fix the problem immediately, but you really think about, okay, how do we need to change as a company? How do we need to change as an industry to get even better so that these become something that's only in the rearview mirror and that we're able to handle well going forward? I'd say now what we do a really good job of is making sure that if and when they do happen, and it should be very rare, but if and when they do happen, that they're contained, that it's not going to spread across multiple stacks, and that you've got the ability to keep it contained so that it's not a community issue.
Yeah, and maybe this is the opportunity to splice in a conversation about alternative chemistries too, and how you view that playing into the market. Will Powin always, exclusively be a lithium ion battery supplier, or are you interested in those other chemistries as well as they continue to evolve and commercialize?
Oh, we definitely are. I think the way Powin thinks of itself is really being an energy storage platform provider. We're not wedded to a specific chemistry necessarily in the bigger picture. Right now, obviously, it's LFP batteries, and we're squarely focused on that and working with suppliers to make sure that we're adopting as they improve the capacity in those batteries we're there. When it comes to alternative chemistries, when it comes to solid state approaches, we keep ongoing conversations to try and get a sense for where things are headed along those lines, and whether it be for better safety performance, better charging, discharging, retention performance, cycling performance. It's the kind of thing that, again, with the approach that we take, we think we'll be able to adapt very quickly and get ahead of these things as they get ready to become mainstream.
And that's, again, the point on not manufacturing at the cell level, is you can pivot as the technology evolves in the market, right? So you don't have to go with flow batteries or whatever Form's working on, or you can get there once it's ready.
Yes, absolutely. It's there. There are a lot of hard problems to solve in this. One of the things I like about Pound, I think we've chosen some of the long-term important and kind of sustainably differentiated problems that exist in this space.
Interesting. And the last point that I want to make on the reliability piece is that the episode that's publishing before yours is actually with the director of engineering at NERC, talking about inverter-based resource problems for the grid. You mentioned, we raced to deploy, and we wanted to deploy as many projects as possible, both in solar and storage. But I think what we're finding, which is kind of unique to the U.S. market, is that there are more and more incidents involving these assets in the field where a fault on a transmission line hundreds of miles away is causing solar projects to trip. And I'm sure you're acutely aware of that just based on the Maxeon and SunPower days. But it's impacting batteries as well. How are you guys thinking about that internally? About how do we make sure that these assets are truly benefiting the grid and are performing the way they're designed from both the OEM side as well as the utility relationship and so on? Because I think as you'll hear in the episode, I hope you listen. As you'll hear in the episode that comes before you, we talk a lot about this industry wanted to run before it walked, and a lot of ambiguity exists in the reliability realm. How do you think about that?
So about 10 days ago, I was in Australia at the Waratah Super Battery site, and this is a roughly 7 gigawatt hour deployment where we're just laying concrete now. Our energy stacks and collection segments are going to be coming in soon. And when you look at that project, the developer there, Acacia, who's a part of BlackRock, they have taken a very holistic approach in how they think about delivering a system that's going to do what it needs to do. And it was great to be there because what you see is that this is a project that isn't just important to them from a financial perspective, but as Australians, this is like an immensely important project. It's tangibly important for the grid, but it's also just from continuing to go down that push on renewable energies. It's such a high marquee, high visibility project. But they've got a very good, close relationship working with us, very good, close relationship with CPP, who's the EPC in this. Transgrid is also involved. So it's like a very strong ecosystem. And we had a series of meetings, and our teams have a series of meetings, but at the executive level as well, we do that because we know that solving these problems is something that you holistically have to get at it. One piece of the pie is not going to get there. And you've got different groups that have their area of specialty and excellence. And so I would think about it in that way. There's a lot of work that we do with the other partners in the space to make sure that when it comes to the grid connections, when it comes to the inverter partners that we have, that we're really collaborating to make sure that we're thinking through all the corner cases especially when it comes to grid connection, to make sure that we've got a stable system.
Taking a look at the market as a whole, what do you think are some of those near-term challenges that we need to address, and maybe the things we don't talk about enough? Obviously, we were talking about thermal events just a second ago, and I appreciate going there. But is there anything else that you think is, hanging out there that this industry needs to tackle sooner rather than later, that you're seeing, at least in your early experience with Powin?
Sure. I mean, I think some of the cues around grid connectivity in the U.S. is something that, obviously collectively we need to get our hands around it. For us, we're in such a kind of a rising part of the growth curve right now that it's not having a big impact on us, but I know that it is just when it comes to a lot of the larger projects that are out there. I think the other thing, and this is admittedly a little bit self-serving, but I would say is you do have a lot of new entrants coming into this space. And I guess what I would caution is that we really need this industry to have even more of a feeling of maturity than what it's had in the past. And I think the players that have been in this, that have skinned their knees a couple of times over their first and second generation products, I think we really need to keep pushing. And having a lot of new suppliers coming in with cheaper solutions, with solutions that are maybe half baked, all it does is set back the dialogue. It sets back the acceptance of what we're trying to do, which is super important. So I think really this industry trying to grow toward more of a sense of maturity, kind of in the way you think of I'll go back to the automotive industry again, right? You have new entrants into automotive, but you get much more of a sense of confidence when you think about that industry and the solutions they're delivering. We need to get that level of confidence, right? Like today's cars, we need to have that level of confidence in this industry so that the constituents of our end customers don't have any pushback or blowback when it comes to having a standalone storage attached to their grid or having a new solar or wind installation going in their community.
Can you add some more color around what those early missteps may have been, or where we skinned our knee that we need to make sure we don't go backwards and continue to evolve?
Well, obviously, I think one part of it is around just some of, when you do have any thermal event, that's a really bad black eye for the industry. So we all need to collectively work to get much better at that. I think as well, I can use, because panels have been around even longer, I can give you a good example there. There are a lot of the panels that were even put in 2, 3, 5, 10 years ago that have just decayed and degraded so much in their performance that they're fairly useless sitting up on somebody's rooftop or sitting out in a solar farm. So there were a lot of kind of grandiose claims that were made around the degradation of those panels and the quality and reliability of those panels that just were not founded. I think if I look back at that, there are a lot of things companies are doing, and certainly it's what we tried to do at SunPower and Maxeon was really make a big deal about the fact that our panels last for 40 years and that they have, the industry's best degradation rates. Bringing that level of transparency and I think even getting closer to creating the kinds of reliability and quality standards that you have in other industries is an important thing for us to do. Again, if we can deliver projects on time and they can do from day one to 7,300 what we said they were going to do, everybody wins.
That's what I'm most interested in right now, too. I get a lot of requests and inquiries from, people in the PR world or even from the industry about what are you covering? Like, what are you following? I think the performance and quality piece is most important right now. I mean, to your point, we know how to build a solar project, but it has to also work and it has to survive. And we're at an interesting inflection point where quality issues and breakage issues and the impacts of severe weather and climate change are all putting project owners and developers under a microscope with not only the public and utilities, but their investors. I think the investor class has gotten a lot smarter than it was even a few years ago as to, their expectations and how a project should be performing in the field. Do you sense that? Because I think that's a growing story here, that whether it's the thermal events or string inverters failing in the field, which I'm hearing a lot about on the solar side, or issues with faults and IBRs misbehaving. These are things that if they continue to percolate and reach a trend level, could be a problem for us. And I don't know that it's being taken as seriously as it should be.
I agree with you. I think it is an issue. I think, and there's also one of my concerns too is that you have a lot of pressure now with rising interest rates. I was listening to one of your earlier podcasts with one of the developers. It's with the pressure that's happening on interest rates, you're now having tougher financial hurdles as they're looking at financing projects. And there's going to be a push to try and lower CapEx as much as possible. You really need to step back and take a bigger picture look at kind of the long-term viability of what you're putting out into the field with a much higher level of kind of a critical eye. And I think especially because we're also getting to that point where you're now getting pushback on solar deployments, and you are getting pushback on some storage deployments. And we need to convince the broader population that these are great things and that they are not going to be rendered useless after 5 or 10 years for some company that went out of business or that didn't have, technology that did what they were promising it could do. So I think raising the bar on that, as I've seen done in semiconductors, as I've seen done, in other industries, I think it would be a great next step for us.
I imagine that Tom Byrne at Clean Capital will be happy that you listened to his episode, and maybe we can get him to buy some Powin batteries, because I think they're getting more involved in storage. So I'll link you guys together. Yeah, I know. I appreciate that point, and I think that going back to Powin's role in the market and being that full stack provider outside of cells, I would imagine removing cooks from the kitchen is beneficial when it's coming down to reliability, good and bad for you guys. So if it doesn't work in the field and isn't performing to expectations and is otherwise misbehaving, that's on you. I mean, there's no one else to really blame. There's not a separate software provider. There's not someone else who's handling the hardware. I guess that kind of shifts some risk from your customers and your partners to you, but maybe strengthens the overall value of the platform. Do you share that thought?
I do. And I think if you're working on something that's important, if you think you're solving an important problem, the worst situation to be in is when you've got people pointing fingers. I mean, I've been involved in my chip days in automotive recalls. And when you have everybody pointing fingers, nobody's happy. Everybody's upset and the problem doesn't get solved. I think by having it more underneath one roof with resources that, report up into me, it gives me a feeling of confidence that we're at a bare minimum, we're going to get it solved faster. I can assure you, we'll get it solved faster than if you have multiple parties in the room, if it's coming underneath our umbrella.
And I know you have a bunch of power electronics partners and people that give you the components that eventually go into that battery shell. But I think to solar, and one of the ongoing issues right now that I'm hearing about is breakage with, these panels that have become monstrosities in size. They're just so gigantic.
Yes.
And when they're getting linked to the tracking equipment, you're dealing with breakage issues. And then you have a OEM on the tracker side pointing at the module manufacturer, pointing at the EPC developer asset owner, and everyone's standing there like, Spider-Man with their guns out saying who's going to foot the bill here and whose warranty does it fall under. I can imagine that that'd be a luxury to at least have one call to make and have you guys figure out the rest later.
It is. It's one of the things that drew me to Powin. It's one of the fun parts of the job is, knowing that, again, an important market that needs what you're doing and positioning yourselves as somebody that can be a problem solver and also a problem avoider, right? Do what you need to do in advance so that you don't have the problems down the road.
How about market fit? You talked about Australia. Powin has projects all over the world, and you're doing some stuff in Europe. You're obviously based in the US and would like to see this market succeed. And aiding that mission is the Inflation Reduction Act and the extension of the ITC to standalone storage. And I'm sure that was welcome news to Powin, your policy team, and the broader segment. But at the same time, I'm hearing a lot more. This is a very I'm hearing episode, which I'm noticing. But that's kind of what I use this vertical for, is just my musings and conversations. Hearing more and more about just the saturation in the space and that we don't have enough bandwidth within the market to support all the build out and all these platforms that are focusing on the US with, predominantly storage serving ancillary services and ERCOT, and looking around the landscape of the rest of the country and saying, where is this all going to go? And is there enough meat on the bone for all of these companies? How do you view it? And how does that fit into Powin's overall strategy of, where you're playing?
Well, I'd say first, when it comes to the U.S. market, we've been blessed to get associated with some very substantial, well-run partners, and I think this might be true of. I think it's true of a number of us. You're really looking for those long-term partners, right? People that are going to have good repeat business for you, because the startup on the first project is always, there's all kinds of pains and bumps and misunderstandings and things you need to do on contracting. But once you get that done and once you build that trust, you can then just fly. And so I think we're really looking for the partners that have that long-term view, whether they own the assets long-term or whether they're thinking about deploying new projects long-term. That's really where we're looking. We've got, I'd say, a number within the U.S. In terms of how things shake out within the U.S. market, I probably would listen to a John Engel podcast to try and learn more about how exactly all it's going to shake out. But I know for us, the U.S. is an important market. We have big projects in Australia. I would say we're still relatively early days outside of the U.S. in Australia. We've got a big announcement we did with Powin Energy with a big 8 gigawatt hour deployment that they're looking at in storage in Southeast Asia and Indonesia. There's a lot of stuff going out there in the world. And again, we look for markets where we think there are going to be developers and partners that want the kind of trusted partner that we're striving to be. If they want somebody who's more transactional, there are others that I think will transact in a way on a short-term basis. There are a lot of options for that. I think really what we're looking for are the ones that want to partner for the longer term.
So you're not interested in a race to the bottom on price and, take the projects where you can get them. You do want that longer term relationship where you can keep coming back to the well with an EDF. You mentioned, some of these bigger clients.
Yes. What I would say, I remember at SunPower, we had in our investor deck, we had this great slide where it showed, probably going back like 20, 25 years, all of the solar suppliers that were in the market. And then it showed how they dropped off over time and how you were left with like one or two that had existed over that period of time. I think the race to the bottom, you get a lot of people that are going to be out there very opportunistically trying to win business. And, that's just not a winning strategy. Once you have some perturbation in the supply chain or who knows, right? Financing, you see those players drop out. So, and I think we see that with most of the customers we work with. They recognize, hey, somebody may be coming at us with some kind of a rock bottom price and a lot of promises, but they haven't really done it before. We don't necessarily trust they're going to stand behind that kind of pricing and terms over time. and we want somebody that we can trust longer term. It's a much better financial model, and our customers want us to be around for a long time. So having us do a project for them where we're losing money, that's not a long-term path to success.
What are some of the other red flags that folks listening should watch out for, not just in picking a battery supplier, but the broader storage industry? Is there anything, I mean, as you're doing your own internal risk assessment, is there anything you're watching for, whether it's policy or supply chain, that you see as, this could be a threat to, our own growth trajectory, but the broader segment?
Yeah, I wouldn't necessarily point to the threats. I mean, obviously we're all waiting, anticipating the domestic content elements in the U.S. market to get figured out, from an ITC perspective. But I think that's a little more of a facilitator just for us building out more of the U.S. market itself. I guess what I would say, and what I'll tell people over Thanksgiving dinner is that you can look at renewables and you can shoot a lot of darts or throw a lot of darts at renewables because of additional funding. And I've had some relatives talk about the IRA and God, we're putting all this money into renewables. You look at the amount of money that still goes into coal today, and it's stunning. Mm-hmm. I think, but people are just completely oblivious to it. So it's, again, I think, you can get to both extremes on this energy conversation and get to untenable positions. There's a really reasonable midpoint when it comes to renewables that make them an unimpeachable answer to a really tough problem that we have within the country and in the world. And, let's get away from the hysterics. Let's really focus on the meat and potatoes side of it. And what you're going to find is that renewable, and in particular, I think the storage element that we're now bringing in is a great answer to a problem that we have. And at Powin, we're working day and night to make that as unimpeachable as we possibly can.
I don't think you did it purposefully, but you beautifully rounded out the Thanksgiving dinner analogy with the meat and potatoes on the back end. And I do want to know if your family, Jeff, is talking about batteries around the Thanksgiving table, because I might need you to press record and keep that in your jacket pocket.
Oh, so many heady, highbrow conversations at the Waters dinner table. Yeah.
You're like, this is why we don't get into cells. And then it kicks off. Let's backtrack a little bit. So we talked about Maxeon going public and you leading that effort. You've mentioned that Powin has a really strong financial foundation, but could that similar path be in store for the company? And do you see that as a worthwhile opportunity to, take a U.S. battery storage manufacturer public a la, Fluence?
Sure. I think Fluence obviously is a great surrogate for us. And, if you look at how they're received in the market, it tells you that the capital markets and public markets are a good potential path for us. One of the things there are a couple things I love about Powin. One is the growth trajectory, right? So 3 gigawatt hours in production or out in the field now, 12 gigawatt hours that's currently in production, a funnel that just continues to grow with time. But we've also got a great set of equity holders as well. And there's patience within them. So, my sense is as we're continuing to do what we're doing as a company, I think there is a path where we could remain a private company. But I think as well, if you look at the kind of growth that we're projecting, I think capital markets would be a good play here. And at the end of the day, it's all going to come down to, what's the state of the capital markets when we're ready to say, yeah, we think this could be a good move for us. For me, one of the things that I like about the capital markets is, the public markets is just the flexibility in being able to add capital. You can do it quickly, right? You can issue more equity. You can do convertible notes. There are a lot of ways that you can go out and pick up, a couple $100 million in a matter of, you can do a shelf listing, right? You can get it in a matter of days if you need it. And when you don't have it, there's just a longer cycle time on that kind of stuff. I love our investors. We've got a great kind of broad set of investors, but I think public could be in our future.
What is that? I mean, do you have kind of a rough timeline on when that would work for Powin without giving away too many, you don't have to worry about forward-looking statements yet. You're a renegade, Jeff. You're a maverick. You can say whatever you want on this podcast, but how does that look? Like, is that still something that, is very far out, or is something that Powin could consider in the relative, future?
Well, maybe I'll answer it in this way. Even despite the fact that I don't have my forward-looking statement concerns. I really think, and we talk in the company about being IPO ready. And it doesn't necessarily, we use that as a term. We don't say, it's not necessarily that we're going to IPO, but it's saying that we have the fundamentals in the engine of the company and in the market and the demand of the company to go public, if that ends up being something we want to do. Because certainly, if the markets are right, and that seems like a good path for us, I don't want to be like, oh, well, we don't quite have all of our SEC reporting engine down. And so we're doing a lot right now to get there. If I think about what we need to do, it's not long term. It's relatively near term. And there are, just things around as you build up more of a portfolio. It's a project-based business, so your revenue can be a little bit lumpy as you're kind of in your early days of growth. And, even though we're at kind of that 3 gigawatt hour phase, we're still cranking. But I think you're going to see things from a growth projection perspective hit a point with a profitability perspective. All those things will come together, and it's not a long-term proposition. It's a near-term proposition.
All right. So a couple of years will be the quote that I take out of this and put in the headline.
I'll deny it if it's longer than that, John.
That's sure. Okay. No one's going to make it to 46 minutes and 30 seconds anyway. So this is where I get to start throwing stuff out. But as you look at the capital markets and what would be the ripe conditions for you to consider a move like that, it has been a tough stretch amid the interest rates and inflation that you were alluding to earlier. And a lot of quality companies in the clean energy space, which albeit is very diverse and you all have different markets and customers, it's been a tough go, especially at the residential level, but even for the bigger players like a NextEra, Yieldco's dealing with pretty significant headwinds. So how do you look at that and say, this would work for us, or would it take like a seismic shift in that landscape to make a move?
We did the same thing at Maxeon, doing the same thing here at Powin, which is you need to focus on the things that you can control. Especially once you become a public company, everybody's always watching the stock price, and you're like, oh my gosh, we're doing so well, but why is our stock price falling 50%? It's like, well, welcome to the energy industry. You have a customer does a bad report, and all of a sudden, our stock price falls in half. I think it's really around focusing and building the right fundamentals of the company in terms of on-time delivery, in terms of, product that does what it's supposed to do, in terms of just building up more and more great long-term relationships with great global customers. You do all of that, and then it's really just a matter of, with your current investors and maybe new investors, making sure that you've got the capital you need to continue to grow. And you wait for the market to get right. I mean, you've mentioned the solar coaster in your podcast before. It's the energy coaster, which I guess is a little less cute, but it's these undulations just come and go, and that's why you need to be a long-term player. You need to be thinking about the long term in this industry, because if you just focus on the current environment and optimize for that, you're going to be sunk in 2 to 4 years. I mean, it's just like almost inevitable.
Let's round out here, Jeff. What excites you most about what you're working on, and what maybe were a few of those things that, as you were sitting in the big chair for the first time with Powin, and you're getting a little giddy of, I can't wait to explore this, or this is an untapped area that we're not taking advantage of, or here's a market movement that, we need to position to strike on. Does anything come to mind?
Yeah, a couple of things. I think, first, I had seen a lot of pictures and had a lot of conversations about this Waratah super battery project that we have. But when you actually stand out there on the concrete and look at it, it's awe-inspiring. I mean, it truly is. And what makes these projects so neat too is that, everything is kind of co-located around the main grid connection areas. So you have all this concrete being laid, and you can see some of the early product coming in. Some of the inverters were making their way in. And right in the near distance, you see this natural gas stacks for a plant that's there. And even just a little bit further in the distance, you see these coal stacks
Hmm.
from the coal-fired plants that are still operating today. So it's like this great opportunity that you're seeing, and you see the rearview mirror just right there in the horizon. And it's beyond inspiring. There are other projects that we're working on that are doing similar kinds of things, even here in the US, that will probably be announced sometime in the next number of months, that take on that same kind of a feel. And that it's just super inspiring. And I think as these communities start to see these things up and in operation, it's going to bring together all the reasons why, I'm guessing you do your podcast and other work, and why I do what I do. It's just beautiful. Um, I think for us, there's also this element of international expansion. And it's not to say that storage isn't happening elsewhere now, but I would just say for us as a company, we're in our early days of really growing internationally. We have some big projects with really important big customers, but there's a lot more out there. I think just within Europe alone, there's a lot more out there, and we're building up even more of an infrastructure overseas to make sure that we can provide the same 20-year assurance of we're going to be there with you side by side for as long as you want us there. We need to build up that same kind of a feel overseas, and that's something I'm super excited about making happen here over the next 0 to 6 months.
Jeff Waters, thanks so much for joining the Fact of This podcast.
John, thank you. I really enjoyed it.
Thanks again to Jeff Waters for joining the podcast. Factor This is a production of Renewable Energy World and Clarion Energy. Join us every Monday as we break down solar's biggest stories with industry leaders who actually moved the needle. And please leave us a rating and review wherever you get your podcasts. Thanks for listening, and we'll see you next time on Factor This from Renewable Energy World.